Most people looking at furnished rentals in Phoenix right now are focused on the wrong thing. They're trying to figure out if Airbnb still works or if midterm rentals are the better strategy. But that's not actually the decision that's making or losing people money. The real issue is they're choosing a strategy before they understand what actually works in this market right now. And that's exactly why so many properties that should be performing aren't. Because here's the truth. Phoenix didn't kill Airbnb. The market just got a lot less forgiving. And if you're still approaching furnished rentals the way people were in 2020 or 2021, you're going to feel like nothing works. And I see this all the time. People buy a property based on what used to work, or what they heard in a podcast, or what someone in a completely different market is doing. Then they try to force that strategy onto a property that doesn't support it. So what I want to do in this video is break this down in a very real, practical way that's actually working right now in Phoenix, where people are still making money, where they're struggling, and how to think about short-term rental versus midterm rental so you're not guessing. Let's start with short-term rentals because this is where most people still want to be. Short-term rentals is still the highest upside play in Phoenix. That hasn't changed. But what has changed is the margin for error. A few years ago, average worked. Now, average gets buried. What's actually working right now on the short-term rental side are properties that are designed to compete. I mean, intentionally built to attract a specific type of guest. So let's break that down. The first category that is still doing really well is large group properties. Think 4-bedroom, 5-bedroom, something that sleeps 8, 10, 12 people. Those properties still perform because they're tied to group travel, golf trips, bachelorette parties, spring training, any event. That demand hasn't gone away. The second category is experience-driven properties. These are the ones with strong outdoor setups, pool, spa, fire pit, putting green, outdoor dining, something that makes the property feel like a destination. Because when guests are comparing 20 listings, they're not choosing based on square foot. They're choosing based on what feels different. And then the third category is location-driven. Old Town Scottsdale, areas near major event hubs, walkable pockets, places where demand is consistent regardless of season. Now, here's a part most people don't want to hear. If your property doesn't fall into one of those categories, it's going to be very hard to compete as a short-term rental right now. That standard 3-bedroom house with basic furniture and no real identity, that's where most of the struggle is happening. And this is where people start saying, Airbnb doesn't work anymore. And it's not that it doesn't work, it's that the property doesn't work for that strategy anymore. Now let's talk about the operational side because this is where deals really break. Even if you have a solid short-term rental property, execution is everything right now. Pricing strategy is a huge one. If you're not adjusting pricing based on demand, seasonality, and booking windows, you're either sitting vacant or you're underpricing and killing your returns. Cleaning and turnover speed matter more than people think. Reviews matter more than people think. Response time matters more than people think. This is not passive, it's a business, and the people treating it like a business are still doing very, very well. Now let's shift to midterm rentals because this is where a lot of investors are moving when short-term rentals feel too volatile. Midterm rentals are working, but for very different reasons. They're not driven by vacation demand, they're driven by necessity. What's actually working well for midterm rentals in Phoenix right now are properties near hospitals, corporate offices, manufacturing hubs, areas with consistent job-driven movement. So think traveling nurses, corporate relocation, insurance housing. That's your tenant base. These tenants care about different things. They're not booking based on how cool your place looks. They want clean, comfortable, and reliable. And from an investor standpoint, here's why midterm rental is attractive right now. You get more predictable occupancy, lower turnover, less day-to-day involvement, and fewer of those extreme swings you see with Airbnb. But there is a trade-off. Your upside is capped compared to short-term rentals. So instead of asking which one is better, you have to ask, what am I optimizing for? Do you want maximum revenue potential with more volatility and more management? Or do you want steadier income with less operational intensity? Now, here's where the smartest investors are going right now. They're not locking themselves into just one strategy. They're building flexibility. They're buying properties and can operate as both. So during peak Phoenix season, January through April, they lean into short-term rental and maximize revenue. During slower months, especially summer, they shift into midterm rental to stabilize occupancy. That hybrid model is working extremely well right now, but only if you plan for it upfront, because not every property can support both. And this is where a lot of people get stuck. They buy first, then they try to figure out a strategy later, when in reality, it should be the opposite. You should be asking what strategy makes sense in this market, then buying a property that supports that strategy, not the other way around. And this is also where I see a lot of burnout happening. People get into furnished rentals thinking it's passive income, then realizing they're managing pricing, cleaners, guest maintenance, platforms, and it turns into a second job. So when a property isn't performing, it's not just frustrating financially, it's exhausting operationally. And most of the time, it comes back to two things: strategy mismatch or poor execution. So if we simplify everything we just talked about, here's what actually is working in Phoenix right now. Short-term rentals work if the property stands out, is in the right location, and is well managed. Midterm rentals work if you're near employment demand and you want stability over upside. And hybrid models work best if you buy with flexibility and understand when to pivot. There's no easy button anymore, but there's still a lot of opportunity if you approach it the right way. Because at the end of the day, you don't just need a property, you need a strategy that fits the market and execution that actually supports it. So if you're serious about getting into furnished rentals in Phoenix, or you already own one and it's not performing the way you expected, here's what I recommend. I don't just jump on random phone calls. I want to understand what you're trying to do, what your budget looks like, and what kind of returns you're aiming for, so I can give you real direction. So I've put together a short intake form. It takes about 2 minutes. You fill that out, I review it, and if it looks like a good fit, I'll reach out and we'll map out a strategy based on your situation. Whether that's helping you buy the right property, fixing a deal that's underperforming, or setting it up so it actually runs like a business instead of a headache. That's how I make sure you're not just getting advice, you're getting a plan that actually works in this market.